What the hell? Robinhood is doing it again. But this time they didn't just shut down, buying on GME. Now you can't trade anything. They've shut down trading on the entire market. I'm just playing around. So yeah, the stock market is closed. Like almost all the trading is closed today for Good Friday. Everything will be open, like American trading markets will be open for Easter on Monday. European markets are going to be closed Monday, but I want to take a look at the market because there is still off-market trading happening, and it's super, super, super drama. Like the S&P is back effing the freaking channel like right now on off hours. You can't trade it. Well, not with options. Anyway, so let's do a check-in. Let's look at a couple things. Things are still happening off hours. So yeah. Oh, like, share, comment, subscribe, turn on notifications. Let's go. So, yeah, it's Good Friday and the markets are closed today, but there's off market activity happening in a couple of the charts. So I may as well do a little review. Look at the S&P, cannot make this shit up. It is doing exactly the thing. So, S&P threw a freaking vertical dart straight up into the bottom of the bull channel and got rejected. Okay, so now I have this like expanding, this expanding wedge thing, whatever this thing is called. So I still am looking at a reversal point. I still have a short-term bullish and medium-term bearish and long-term bullish outlook. Okay, so I think we're gonna get stuck on the bottom of this bull channel again. I think we're gonna get stuck on here, and I think we're gonna bust. I think we're gonna bust down out of this channel. But look where the top is pointing. The top of this channel is up here. Not quite that hot, but it's up here at the top of the bull channel. And it actually wouldn't surprise me one little bit to see us get up here. So this bottom of the bull channel is major resistance because we have rejected off this thing 1, 2, 3, 4, 5, 6, now 7 times, whatever. Like, we fell out of this bull channel and we're underneath it, and we're still underneath it. So this is like the most massive resistance. And this is a key place to start looking at, taking profit off of longs and start looking for short entries. And you can't, well, not with options anyway. There's probably some off-market trading stuff you can do, but anyway, the S&P is right up under the bull channel, in trouble again. Maybe it is in trouble. But I was saying before, like, once we get to this channel, like, the bullish thing to do is kind of just try to get some support in here. And now I'm like, wait a second. No, like, look at this uptrend line that we already painted. Like, is it gonna just sit here if it gets in here? No, it's not gonna do that. If we get in here, man, we're gonna go up, and we're gonna go get this trend line. We're gonna go get it, and that will be a ridiculous reversal point. If the S&P tries to do that, that is gonna fail real hard right there. So it's still really hard for me to try to go long. Well, I don't trade the SPY long anyway ever. Because there's always a better play than that. If for long plays, you got to figure out what's moving. But man, yeah, it's going to be really hard to bust into this channel. And now we have a 3-day weekend, and the stock market really doesn't stop moving just because the market's closed. So like, it's going to be crazy stuff that just happens off trading hours, and who knows, like, by the time the market opens, we could be freaking up here, like, out of control. We could still be back effing this channel from underneath, which would be really bearish. Actually, I'm not really expecting one of these kind of weak bull moves into the bottom of the channel at this point, just because we have this uptrend line. I think if we get in here, I think we're going to pop. And I think if we get underneath, we're going to break down out of this thing. That's the two scenarios that I think are most likely. And they're both bear reversal scenarios. So, I was super short-term bullish the last 2 days maybe on the S&P because we're coming up trying to find this channel. And now we found it. So now I can't be short-term bearish here. I mean, if we get up in here and start going up, I could maybe be bearish for a day or something because we're trying to get up. But right now, S&P's in a bad spot and can't really trade it. Anyway, that's the look. I guess let me just kind of pull back out and show the channel again for anyone that's just popping in. We've been on this bull channel for several months here, and you can see we started, well, and this is right around Jan 6. Man, this is exactly, January 6th is exactly when the strong dollar reversal started, and the S&P started hating it. It started chopping, right? But we chopped to the channel, fine. And then we chopped down, right? But we didn't coil under the channel. We just stabbed and we popped back in. All good still, all good. But then Feb 15 is like the next strong dollar reversal. And this is when we chop down out of the channel. We start coiling underneath. We start rejecting off the bottom of the channel. We get this grinding reversal off the bottom of the channel. And this really makes it look ugly. This is why I can't trust anything inside of the bull channel after this grinding reversal off the bottom. Like, I'm just straight bearish under the channel. Under the channel, but it's an uphill channel, so we go up to the channel. This is all-time highs, but we're at the channel now, so it's ugly. This is ugly. Let's just show where the dollar is, and I've been talking about the dollar a lot, but this is not trivial. Let me go out to like a weekly and just show the dollar chart and what I'm explaining. Because we had, during this entire bull run, we had this super, super weak dollar channel down. And then, yeah, right here around Jan 6, we had this pop, and we broke out of the channel. And then we had the uphill W, and now we're breaking up to the previous kind of consolidation zone, right? So we pulled back off of it. So this is a strong dollar trend line. And we've had strong dollar trend lines since 2008, and this is what they look like. Like the 2008 crash, we pulled down, strong dollar reversal, right? Boom, boom. It's like 08, 09, 11. These are all strong dollar reversals, but see, we pull through the trend line, and then it gets steeper. And then we get a 14, May 18, right? And now we pull down through that trend line, but this trend line is even steeper. So this is what I've been saying, like Brent Johnson's like dollar milkshake theory matches the trend line that we're on now. This is a steep, it's a more steep strong dollar trend line. And strong dollar trend lines can run for 3 years, 5 years, stuff like that. So if we get a 5-year strong dollar, like that's pretty angry, especially if we do vertical moves up off of it. It's just really, it's really aggressive on, well, the market, kind of, but, I mean, I've been looking at oil, and the freaking oil chart is so dumb, because we had the negative contracts trading last year, so that it just, like, completely made the chart look ridiculous. But every time we get strong dollars, it really hurts oil. So let's see, where's this Jan 6? See, like Jan 6, strong dollar versus where oil is still busting out of the channel. So this is really strange. Like every time over the last 10 years we got a strong dollar reversal, it knocked oil really hard down. And now oil has been rallying into the strong dollar until now. It just pulled back. But I don't know. I don't know if oil's in trouble. It usually hates the strong dollar. The stock market usually hates the strong dollar. But, I mean, you can see it's rallying anyway. Like, it is pulling back. It's getting choppy, but it's still rallying into it. So it's pretty interesting. It's pretty hard to predict. Like the market seems to just be running on margin. Like we have international banks loaning a ton of money to funds on margin, and they're just piling tons of new money into the market is what it looks like. And basically, as long as that continues, it's going to be bullish. It's just a ton of new money coming into the market. I'm not buying the scenario that like stimulus checks, like some millennials with $1,000 check are like driving this whole bull market. That's ridiculous. Like this is loans from international banks on margin. It's billions and billions of dollars from banks. It's new money loaned out on margin, billions and billions of dollars. Not part of a $1 trillion stimulus thing, where like 1% of that money is getting invested in some random stocks. Like this is huge funds, and like each of these funds is like billions of billions, and they're driving this thing up. Anyway, that's the idea that I have on why it's driving up. Just check a couple other things. Bitcoin. Oh, and also like the reason. Yeah, so Bitcoin is just it's kind of stuck here at this level for a while, like around 59. It's been kind of chopping and testing it. So I think Bitcoin's a little hot away from the moving average. I could see a pullback or just a consolidation sideways in Bitcoin. I don't think Bitcoin's just going to like run hot like way farther away from the moving averages, because it usually doesn't get this far away from, like this is like the 120-day. Like Bitcoin usually will pull back and check in with the 120-day average more often than this. So I'm expecting some kind of consolidation move, maybe a pullback in Bitcoin. What else is happening? Oh, right, Tesla I was talking about on Friday. Let me get into like an hourly chart. So Tesla has this downtrend line. That's what I was saying Friday, is like we're running into this down channel here. I was going to see if it could make it to the 700 because it loves it, but yeah, I just caught this and pulled back. So that's kind of an obvious short-term spot to check back on. If this falls through down, I don't know. If we get, let's see, if we get the entire market getting in trouble under the bull channel and Tesla is here rejecting off this trend line, then Tesla could get in big trouble. Like Tesla could really drop. And you can see the downtrend lines. Like we've stabbed this thing 4 times. So we've painted a good downtrend line. But that doesn't mean we're going to stab it again. Like that could be the last stab. We got kind of a double bottom here. That could be the last stab down for Tesla. But like here, you know, we kind of rolled over and we didn't hold a support level. We rolled under it. So it's still drooping. It's still headed down. It's still checked hard off of this down channel. Anyway, I see a ton of risk in Tesla, especially if the general market gets in trouble underneath the bull channel again. I think Tesla's going to be a really aggressive short play. ARK Invest is almost the same chart, similar down channel. ARK and Tesla have been sort of my top 2 shorts recently, because we've just seen like tech sort of rotating out. And let me look at this is a cool chart. On the NASDAQ versus the SPX. Let me go to the weeklies and show what's up. This is a really cool one. And so, alright, so I'm going back to the 80s. So like this everything bubble bull market really started in about 1982. The bonds started bubbling in the 70s. The market started picking up in the 80s. But you can see here, it wasn't until the 90s that tech and the NASDAQ started really outperforming the general market. And we started bulling. And this is the dot-com bubble bust. which was a big deal, but it really didn't break the trend. I mean, it just kind of popped and pulled back, and we just continued more and more outperformance on the NASDAQ. And you can see the neckline of the dot-com bubble. Like, we've just gone to a point where we're outperforming even the dot-com bubble now. And we gapped up here across the neckline. So this is a really interesting spot, because if this is a false breakdown, or a false breakout, I'm sorry, if it's a false breakout, we're probably going to gap back across the neck, and that would be a huge down move on tech, which I've been calling just like a rotation out of tech. But I mean, it's still pretty much hotter than the whole market at this point. But if we see this move, and then we see like a tech-ish kind of blah blah market, we could have a fast and hot rotation out of tech, and then a tech kind of just a weak tech performance under the rest of the market if we start moving down. But we're coiling here. We haven't decided. Or if we pop here, then tech will just freaking blow up and go crazy. So I'm in the camp that I think we're going to break down, and I think we're going to start rotating out of tech. And the reason I think that is just it's just basic credit expansion cycle stuff. Like, when you start a new credit expansion, the bonds will bubble first, then tech and growth will bubble. And then when you get starting to get near the end of the credit expansion, near the top of the bubble, the bonds will rotate out first. And we've seen that. If you go to like the bond chart, you can see that the bonds started rotating out last year, and they're already like, well, the rest of the market was crushing it. You've seen bonds just get weak and terrible. So bonds could be bearing for a while. They've already rotated out. It looks to me like tech is going to rotate out next. That's what I've been saying. So that's a very long-term analysis since like 1982. But like, if tech rotates out, it's not a joke. Like, I'm talking about tech rotating out hard this year and underperforming for like 30 years against the rest of the market. And the things that come in when tech rotates out is basic materials, minerals, metals, miners, that sort of stuff. And so those are the charts I've been watching a little bit more closely. GME, let's check in on GME. So we need like a 5-minute chart on this one. Yeah, so GME has been trying to break this 194 neckline, and it failed again on Friday. And we maybe have a support line here that could pull us through the neckline coming into next week, but this is not like a bubble support line. It's not steep enough. This is just sort of, here, let me take auto off. So we kind of have a lower support line coming up underneath, and you can see this line is almost the same angle. That's definitely not a bubble takeoff sort of a trend line. Let me go out to like a 30-minute so you can see the shape of it. So I painted this line yesterday. And it looks like this first bubble is just a huge crossover, and we might be in a bigger consolidation channel out until the end of April or something like that. And so if we do pop out like on this weak trend line, I want to see if we get stuck at this 256 or if we can get back up to this neckline at 330. Because the last time we popped 330, we crashed, and then we just came and got stuck under this trend line. So I think we might be consolidating out around this neckline for an entire another month, which would be sort of boring, I think, but also interesting for swing trading, because we know that this 194 is the stickiest spot on GME for like 2 months, and anytime we get away from it, you can just do like a swing trade to the 194. If we crash down here, swing trade it to the 194. If we pop up here, Swing traded to the 194. Either that or we can just get out of here. We can actually find a bubble trend line and actually just like blow this neck out and just take off. I do think GME is gonna bubble out and take off, and it might be in May if we just consolidate all of April around the neckline. It's just gonna get more and more and more boring, and then maybe we'll get a breakout. I don't know. That's kind of the look on GME. I really thought we were going to start taking off this past week, and now we're just kind of consolidating right under the neckline. It's like, I don't like the chart as much. I don't like the upside as much from that spot. So anyway, that's kind of the look on GME. And then these like metals and minerals and miners, these are kind of the charts that I'm looking at. LODE is like a small miner. FCX is the big high momentum mining stock that I've been following. I've got like a daily chart and show. This thing has been bulling since the COVID crash, and it hasn't been pulling back with the market pullbacks very much, a little bit, but it's staying really strong. And so this is the sector, the momentum leader in the sector that I like for the scenario where tech is rotating out. So like shorting Tesla out, shorting ARK out during a rotation, and then calling like FCX in, calling it up is kind of the idea that I'm thinking of. But yeah, anyway, this is pretty cool. A pretty cool spot to be on the general market, just like right up under this thing. I mean, no joke. Look at it. You cannot make that up. Like, it just screamed on off-market trading dead into the back of the channel and just did a vertical freaking reversal off of it. And it's amazing. Alright, so we'll see what we get. We'll see what kind of action we get on this thing. But, it's so annoying. Like, the coolest stuff always happens off hours when you can't trade options and stuff. Super annoying. And also super drama. Yeah, so I think that we get stuck under here and we just do a weak fallout, maybe a back test over the next few days, and I think it's going to turn down out of this because this expanding wedge thing it just usually falls out. It just usually turns over and falls out. And we've already hit it, what, 1, 2, 3, 4, 5 times. Yeah, that's enough. I mean, that's enough hits to already be. We don't have to like go up and paint the wedge like hot up here, but it's definitely a target. Yeah, so hot upside target is up here at 41.36. That's the top of our little bull channel. Getting back up in there. Danger zone is right here, right now, at the low 4,000s. This whole area. And yeah, I just like to point back at this area back here where we were attacking the crap out of the bottom of the channel. It doesn't line up perfect on a 15-minute chart. It's better on an hour chart. That's where I drew all the lines. But you can see we just reject. Like this grinding multiple rejection is really, really mean. Like if you grind like this, you usually don't come back and do it again. You usually get more of a sharp rejection on a follow-up. It's like, that's sort of like calling a dead cat bounce, except it's kind of ridiculous to call it a dead cat bounce at all-time highs. It's just a rejection off the channel. Yeah, alright, so that's kind of the look for off-market, kind of coming into the weekend. What else? I don't know. Doge. Let's look at the Doge. The Doge is a pretty interesting chart. If you go out to, I think, dailies, you can see what's going on. Yeah, look, it's pretty obvious. It's just bulling up a really mean trend line. And this is the most like vertical angular. It's like a right angle freaking bull flag. And if we stick to this trend line, we should be kind of flagging into it mid-April somewhere. This is a pretty hot candle there, though. That's surprising. You usually will pull kind of down when you're flagging, not pop up like that. Like this is a more typical flag where you're kind of rolling down while you're flagging into support. This is a really weird flag, or it's almost up, I guess. It's like an angular upward almost flag. But anyway, that's a look at Doge. It looks like it's going to be over the next couple weeks coming into support, and it could take off again. Whatever, that's enough stuff for now. Nothing really going on, just the S&P at all-time highs, rejecting off the bull channel, no big deal. This is not investment advice, just a couple of scenarios, what I'm seeing on the trend lines. So have a good weekend, happy Good Friday, and cheers.